As the price of metals heats up, there's another transaction in the air. And perhaps more importantly, the M&A activity looks like it's finally starting to trickle down to the juniors. Of course, we're talking about Cerrado Gold's announced acquisition of the Portugal-focused Ascendant Resources. Let's dive in. Okay, let's start off with the high level. Cerrado Gold is set to acquire Ascendant Resources under a definitive agreement that outlines an all-stock transaction. The arrangement will see Ascendant shareholders receive 1 share of Cerrado for every 7.8 shares they hold in Ascendant, which equates to about 6 cents a share. The figure on a 30-day volume-weighted average basis equates to about a 14% premium. But as Cerrado highlights, there's basically no premium based on the most recent closing prices of the two equities. A total of 27.7 million shares of Cerrado are expected to be issued in connection with the transaction, which effectively values Ascendant at about $13 million, once some debt is factored into the mix that needs to be settled in advance of closing. More on that later. The draw here for Cerrado is Ascendant's 80% stake in the Lagoa Salgada project in Portugal. The project, found in the Iberian Pyrite Belt, is currently at the feasibility stage, with Ascendant having outlined a net present value for the project of $147 million on an after-tax basis, with the project having an IRR of 39%. In addition to being at the feasibility stage, a newly optimized study focusing on improving economics is due out later this year, while approval under a recently submitted environmental impact assessment is expected to be received in the next few months, leading to a construction decision by year-end. In other words, Cerrado is paying about $13 million for an 80% interest in a project worth $147 million, which could potentially be under construction later this year. Oh, and the project is expected to cash flow about $75 million per year. Sure beats paying for an asset that needs millions in exploration dollars to be spent on it, doesn't it? All right, let's take a deeper look at the main asset here, Lagoa Salgada. The project, which Ascendant Resources holds an 80% stake in, is found within one of the largest VMS districts globally. The anchor discovery here is Venda Nova, which notably remains open in all directions and is classified as being both under-drilled and underexplored as per Ascendant. Geophysical anomalies that exist on site that have not yet been explored are said to have the potential for multiples of resource expansion. True to VMS deposits, Lagoa is expected to pull multiple minerals out of the ground, the dominant of which is zinc at 36% of payable production. 35% of production is attributed to lead, while copper sits at 12%, tin at 10%, and gold and silver at 7%. The most recent feasibility study, which was completed in 2023, estimates the project as having an after-tax NPV of $147 million and an IRR of 36%, which is based on a 5% discount rate and $1.20 per pound zinc. Initial mine life is pegged at 14 years, with initial capex of $164 million. Average annual production over the first 5 years is estimated at 124 million pounds of zinc equivalent, at an all-in sustaining cost of 59 cents per pound of zinc equivalent. Over the life of the mine, average production is pegged at 77 million pounds, while AISC is estimated at 71 cents per pound of zinc equivalent. On top of this, the project has been granted the designation of being a project of national interest in Portugal, and is expected to be granted EIA approval in Q2 of this year, leading to a construction decision by year-end. Should construction be approved later this year, the 18-month construction timeline is expected to result in production beginning in the second half of 2027. Project financing is also in the process of being secured for Lagoa Salgada, with Ascendant prior to the transaction with Cerrado having held discussions with several potential offtake partners to secure funding for up to 70% of capital expenditures, which would be supported by the UK's Export Credit Agency. Now, before we go any further, we should highlight that these two parties aren't exactly arm's length, which hasn't gotten a lot of attention in the media. They both currently run out of the same back office and have since at least 2021. And while they may not technically be related parties as per a comment in a news release a year ago, they are classified as being related at least within financial statements, where it's outlined that Ascendant currently owes Cerrado $4.3 million or so, which is related to that shared back office, as well as a gold promissory note issued a couple of years ago. Oh, and Mark Brennan, the executive chairman and founder of Ascendant, is also CEO and executive chairman of Cerrado. So, this wasn't exactly a shocking transaction to materialize. Anyways, as part of the transaction, there's also some particulars that Ascendant needs to settle in advance of the acquisition closing. First and foremost, they need to settle a $1.66 million debt with Sprott Private Resources, Streaming and Royalty, which is owed under a secured note. This debt will be settled via the issuance of shares at 5.25 cents apiece, which has to be completed in 2 tranches once shareholder approval is obtained, because the settlement will ultimately push Sprott to a 25.6% ownership interest. In the interim, Cerrado will fund Ascendant via a $900,000 investment, also at 5.25 per share, which will push its ownership stake in Ascendant to 14.5%. The first parts of the debt settlement and funding from Cerrado are expected to close in the next few weeks. The second tranche of the Sprott deal, meanwhile, is slated to close as promptly as possible. Of course, shareholder approval is required for the entire transaction to proceed, with 66.7% of Ascendant shareholders required to approve of the transaction. Once the settlements are conducted, Cerrado will have locked up about 53.4% of shareholder support, virtually guaranteeing the transaction will go through. Closing of the entire transaction is slated to occur around the end of April 2025, providing shareholders approve the deal. All right, so let's wrap it up. Is it a good transaction for shareholders? Well, despite the related party angle to it all, Cerrado appears to be gobbling up the Lagoa Salgada project for an incredibly low price. Yeah, the project needs to be funded and built out, but let's put it into perspective. The company has just issued a few shares for a project that is pretty well construction ready, pending a permit that is set to be received shortly. In comparison, if a discovery were made today, how many millions would be spent to get it to the stage of Lagoa? How many years of exploration would it take? Instead, Cerrado gets to potentially begin putting its latest mine into production later this year, with funding requirements of less than $5 million to get the project to this construction decision stage. Seems like a pretty good trade to me. All right, everybody, thanks for watching. If you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. Also, let us know what you think in the comments section. Thanks for watching, everyone.